Coming up on the SBS On The Money podcast, the Australian dollar at a fresh 16-month high against the US, gold at a record high, and we take a look at the investment opportunities for investors in 2026. All of that and more next. Hi everyone, welcome to the SBS On The Money podcast for this Friday, the 23rd of January 2026, a day where the Australian share market rose, but only just. The S&P ASX 200 up 0.1% to 8,860. On the index, most sectors ended higher. Information technology, the best performer by far, up by 3.8%, and that's pretty much because of the family sharing app Life360. Shares in that company up 27%. It released some profit numbers today, which were ahead of expectations, so that's why it did well. Other sectors doing well today: materials, that's as the gold and silver price hit another record high today. Telecommunications also climbing. The worst performers include consumer staples and consumer discretionary. Financial stocks also down today. The worst performer on the index, Drone Shield, off by 5.5%, and A2 Milk shares down by 4% today. Some of the better performers, apart from Life360, gold producers, the likes of Regis Resources up by 10%, Greatland Resources up by 7.6%. And looking at some of our biggest stocks, the Commonwealth Bank today down by 7.5%, Westpac down by 4%, NAB losing 0.2%, BHP today off by 1%. But those doing well of the larger companies include CSL, shares up by 0.7%, Fortescue 0.1% stronger, and Goodman Group up by 0.9%. But the big story of the day is that Australian dollar hitting a 16-month high against the US, around 68.5 US cents. For more on that and the day's action, I spoke with Tony Sycamore from IG Markets. Tony, so the Australian dollar is on a tear right now at around 68.5 US. It's one of the best performers so far this week. Can you run us through why, and is 70 the next stop?
Yeah, well, the Australian dollar has indeed been a standout performer this week, up around 2.3%. The key driver has been the robust December labour force data, which has ramped up expectations for the RBA to hike rates at its February meeting. Add to that improved risk sentiment from the resolution of US-EU tensions over Greenland, soaring precious metal prices, and you've got some very solid support there for the Australian dollar. As for 70 cents being the next stop, it's certainly possible in the weeks ahead if the current momentum holds.
What about the currency moves? Are they adding to the attraction to the gold price, which is getting closer to $5,000, because they need to be purchased in US dollars, and if the Aussie dollar is doing quite well, there's that attraction there. Is that providing some support?
Absolutely, yes. A softer US dollar on expectations of additional Fed rate cuts this year has made gold more attractive to overseas buyers. But it's not the only factor. When we look at what has driven the gains in the gold price, it is that ongoing safe haven demand driven by geopolitical uncertainties, as well as central bank and momentum buying. And then you have these concerns over spiraling fiscal deficits as well, all adding to the mix there.
So as we mentioned, US interest rates are expected to fall this year. That'll have currency implications. But how certain is the market that we'll see a rate cut? Because we saw those US GDP numbers revised overnight to an annualized rate of 4.4% in the third quarter. That's the fastest in 2 years. So does the US economy really need a rate cut like Donald Trump is pressuring the Fed Reserve to do?
Well, the certainty around additional rate cuts this year has eased following some strong economic data, including that GDP print. We are looking for the Fed to keep rates on hold when it meets next week. But as for rate cuts later this year, just on the pure data side of things, probably not needed, as the expansion we're currently seeing in the US economy looks very, very solid. But Trump's pressure for lower rates to juice growth, particularly under a new chair, could influence the Fed's path towards lower interest rates in the second half of this year.
I'm going to bring in a acronym that we used a lot last year because it's come back today or in recent days, and that's TACO, Trump always chickens out. To what extent is the market now discounting all of his big statements, given he's rolled back on his European tariff threats and those sorts of things? Or is it still adding to uncertainty?
Yeah, there's certainly been discussions that Greenland has become Trump's latest taco, but it is worth also noting that Trump was able to secure a NATO deal for permanent US access in Greenland without force in just under a week. So for me, I'm not sure whether it was actually Trump that folded or the NATO leaders, but either way, it has achieved a key objective of the US administration. Overall, the events of this week are in line with the administration's unpredictable style, which is going to keep markets on their toes in 2026.
How is all of this, everything we've discussed, how's it all flowing through to the way the share market is performing today?
Well, we're up on the day, but it does look like we're set to end the week about 1/3% lower. And the reason for that is those interest rate sensitive stocks in the ASX 200, property, financial, and consumer facing stocks are dragging the market. And we know that's a result of yesterday's robust jobs data, which has certainly increased the chance of an RBA rate hike in just under 2 weeks' time.
Any stocks catch your attention today?
Life 360 is absolutely flying today, up around 28% after it upgraded its FY25 revenue and earnings guidance. It comes at a very good time for the app maker after its share price has slumped by more than 50% over the past 4 months.
And finally, in wrapping up, what are you telling your clients right now, and where do you see the opportunities for investors?
The focus has to be on quality and to filter out the noise in this type of environment. To that effect, we continue to favour the big mining stocks here in Australia, which look set to extend their gains. Next week's going to provide a very good guide on whether the AI trade can regain traction, with earnings reports from 4 of the big tech giants in the US set to be released.
That is Tony Sycamore there from IG Markets, and he wraps up the podcast for this Friday and for the week. Don't forget, if you enjoy it, to give it a rating or review on Apple Podcasts and Spotify. Click subscribe. I'll see you next week. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.